Pablo, good to see you as well. How you doing? How you been? How's things, Pablo? How was your day today? Funky brother, good to see you as well. Evening, how you doing? How you been? Okay, I was just pinning the live. It's pinned. Hello, Miles. Scott, good to see you as well. How you doing, brother? How's things, Scott? Good evening, CMF. Let's go, funky brother. Good evening, Miles and all CMF. JP, good to see you, brother. How you doing? LJ, good to see you as well. How you doing? Good day. How about you, Miles? It was eventful day, I would have to say. Even Miles of CMF, did you have an interesting day today? I did in a way, yeah. How you doing, Miles? I'm doing great, Scott. Good to see you. How you doing? Joe, how's your day? Brother Miles, how have you been? Good. I've been good, funky brother. How's things with you? Okay. Let's do intro, disclaimer, and essentially what we're going to be talking about tonight's live by the time everyone tunes in for the first part of the live. Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles. You can tune into this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, pretty much vital information for you to know about regarding the world completely transforming into a digital space. We also do Q&As on this live as well, which means if you have any questions, put it down in the comment section. More than happy to help you out. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So welcome to CMF Live. If you're watching this for the first time ever, if you're regular, let's go CMF. By the way, thank you so much to everybody who has already liked and retweeted this live on X and put a comment outside the live as well on X if you're watching this on X. And if you haven't CMF members and you're watching this on X, drop a like, drop a retweet, and drop a comment. And if you're watching this on YouTube right now and you have already liked the live and put a comment outside the live, thank you so much. And if you haven't, please drop a like outside live on YouTube and drop a like if you're watching this on YouTube. If you've done all those things, honestly, thank you so much to every single member of the CMF who has already done all of those things. And this is episode 378 of the CMF Live. Now, on tonight's live, we're going to be talking about essentially what's been happening over in the UN with Trump essentially saying a few things regarding the market space, regarding Europe, and so on. And is it going to have any sort of impacts on the crypto market, the stock market, and gold's price, essentially? We're also going to go through some essentially announcements on tonight's live. We're also going to go through some. There we go. We're also going to go through some essentially announcement news on tonight's live as well. Some partnership news, some stock market news that's relatable to cryptocurrencies. Obviously, Ripple news to go through on tonight's live as usual. Now, the first news we are going to be covering on tonight's live is regarding Trump and essentially what's going to be happening next. We're also going to talk about the Clarity Act on tonight's live as well. Now, let's go inside the comment section, obviously, before we do go through the first, essentially, news on tonight's live. Let's see where we were at. Good evening, Miles and CMF. Frame Feather, good to see you. How you doing? Hello, Miles. T, good to see you. How you doing? Good day, Miles and CMF. Mike, good to see you. How you doing, brother? I've been dollar cost averaging XRP over the last week. Let's go, Scott. Morning, Miles and CMF. Shelly, good to see you. How you doing? Good evening, Miles. How you doing today? I'm doing great, Michael. Good to see you as well. Good evening, Miles and family. Manny, good to see you. How you doing? Share the live. Let's go, Scott. Hit the like button. Let's go, Scott. Do you think Trump will essentially reserve the no interest on stablecoins or reverse it? Essentially, no interest on stablecoins. Maybe, if Trump's administration, if Trump wanted to through his administration, he could put pressure essentially. I mean, we know for a fact that Trump's family is not very fond of banks. The reason why Trump's family, created this World Liberty financial project and essentially is very pro-crypto is because banks were rejecting the Trump family at a certain time point, which was during the election times, a little bit before the election times, and essentially Trump's family started going towards cryptocurrencies as an alternative, and that's where the whole passion for crypto started with Trump as well, when he was being rejected. possibility, I mean, he is in favor of cryptocurrencies more than essentially traditional market space, you could say, up to some extent. It's a possibility that he will essentially reverse that somewhere down the line. Hi, brother. Come on, good to see you. How you doing, brother? How you been? Can you explain what crystals dilithium is and lattice crypto? Yes, Kerry, I'll do one better. Put a comment outside the live, and I will respond to your comment in short paragraphs on essentially on that matter. Now, Trump's bold stance sparks a market turmoil. The recent breakdown negotiations and the lack of progress following the Alaska talks have visibly frustrated Trump. His tone in the past essentially 2 weeks has been increasingly stern regarding the situation with Russia. Today, he expressed essentially these harsh sentiments both the United Nations Generals Assemblies on essentially his Truth Social account, hinting that cryptocurrencies could experience significant declines. The market might be becoming a little bit more volatile. See, what's happened is Trump's went to the United Nations, giving this big speech about how Europe is failing, how the UK is failing, and how they're essentially opening up their borders, and so many other issues that's happening over in Europe. Also, it might lead to more tariff situations as well. Now, we've seen how in the past the crypto market space essentially reacts to tariffs. Tariffs used to shock the crypto space, not so much anymore. Maybe 24 hours of, essentially to 40 hours max, the markets might become volatile if, depending on which country is chosen for tariffs. Cryptocurrencies have already faced essentially sharp declines, but Trump's latest remarks suggest that further drops could be possible. He highlighted the possibility of restoring Ukraine's original borders and reclaiming its territory, coupled with serious threats against Russia. Trump essentially did not hold back at the UN, and he continued his essentially barrage on social media, declaring essentially Russia as a paper tiger. Risk markets are bracing for increased war, essentially, the EU's deeper financial involvement in the conflict, and Trump's also more aggressive measures. The risk from Russia is becoming increasingly apparent, particularly impacting altcoins. In his words, Trump addressed the military and economic state of Ukraine and Russia, expressing a belief in Ukraine's potential for full restoration with EU backing. He criticized essentially Russia's prolonged warfare, stating it reveals their vulnerabilities and described the nation as a paper tiger. The president suggested that economic hardships are essentially mounting in Russia, with significant economic essentially resources directed at essentially unyielding essentially war with Ukraine, which is increasingly blustered by strong public moral and European essentially support. He also implied that the Ukraine could possibly restore its former borders, challenging Russia's capabilities. And Trump essentially asserted that Russia faces severe economic essentially difficulties and suggested that now is Ukraine's time to act. He concluded by wishing success to both countries and pledged continued military support to NATO. At present, Bitcoin's essentially price became a little bit volatile, not majorly or drastically volatile in any sort of a way on this essentially announcements. With further declines, you could say might be expected. Ukraine is no longer dealing with hesitating essentially commanders in chief in the White House, but is receiving full support from the EU, the US, and NATO to confront Russia. The prospects for peace have vanished, and the conflict will likely be resolved only through military means. So, let's just say Putin and essentially Ukraine, Zelensky in other words, don't come to some sort of a conclusion of ending the war. It may seem like NATO would probably get involved. It may seem like Russia. I mean, Trump, we know for a fact, Trump isn't the type of man to bluff. So if he's now saying that he's given full support to Ukraine, that if they want any sort of backing in terms of military, not money, but in terms of military, if they need any sort of backings, then essentially the US is there. The EU is also there as well. A full-blown war might be starting off with Russia. It could all be a distraction. You've also got to consider multiple outcomes. You never consider one outcome because that would be completely foolish. But you could consider it as an outcome, as one of the outcomes, that essentially a full-blown war could break out with Russia if Putin doesn't calm down, you could say pretty much. Now, what's the impact of that on the crypto market space and the stock market? Well, the stock market will pretty much essentially crash. Will Bitcoin survive? Will the digital gold, the safe haven, the risk of asset, all the title that Bitcoin's been given? No. Bitcoin will most likely go down. Will gold survive in that scenario? Yes, because it's a real safe haven and essentially an actual risk-off asset, not an asset that pretends to be a risk-off asset and so on. And it goes back to what Morgan Stanley said yesterday as well. But that's if a full-blown war essentially, happens. And I don't think, personally, I think Putin is, more intelligent than that to start a full-blown war, because he knows the consequences will be very bad for his own country. So I don't think he'll start any sort of war with, the EU, the US, and the UK, because that's just a losing battle. No matter what people would say on the internet, Russia's strong, the US has never won a war. The reality of it is Russia will get obliterated. And I don't think Putin wants that. So I personally think somewhere down the line, they're going to draw that line and that war won't start. Now, once they say, one country might provoke another to, keep the war going, who knows? But you can consider as an outcome, not the outcome. But that's what will happen towards the market space if that happens. Now, regarding the sanctions, in the increasing sanctions, that doesn't have any sort of impact on the market space whatsoever for now. And regarding extra, essentially, tariff situations on any country helping, essentially, Russia, doesn't really affect the market space anymore either. Now, moving on from that to Jerome Powell. Before we talk about Jerome Powell, let's consider the comment section first, and then we'll go straight into Jerome Powell news. Good evening, Miles and family. Good to see you, Ian. How you doing? Good evening, essentially, Miles and CMF. Bullock Soppy, good to see you. How you doing? Happy Pisces, good to see you. How you doing? Evening, all. Susie, good to see you. How you doing? Hello, I'm from Nigeria. Samuel, good to see you as well. How you doing? Hi, Miles and CMF. Hope everyone is well tonight. Adi, good to see you as well. How you doing? Hi, Miles and CMF. George, good to see you as well. How you doing? Now, Fed. Regarding the Fed rates, essentially, the discussions that are going on right now is that we might be having 2 more or none at all. But it seems like Jerome Powell, well, here's what's going on. So the Fed cuts rate essentially again has essentially Jerome Powell address economic risks. So the Federal Reserve Chair, Jerome Powell, announced today a 25 basis cut essentially in the targets, essentially federal funds rate, aiming to foster economic stability amidst the persistent inflation situation that's going on. The rate cut is poised to encourage risk-on sentiments, essentially potentially impacting cryptocurrencies like Bitcoin and Ethereum, as capital seeks yield amidst moderate, essentially, economic growth. The Federal Reserve reduced essentially the target federal essentially funds rate by 25 basis points to 4% or to 4.25%, highlighting Jerome Powell's ongoing leadership. This essentially decision comes amid moderate growth and persistent inflation concerns, demonstrating essentially the Fed's commitment to its dual mandate of maximum employment and stable prices. Expectations for increased liquidity in both traditional and crypto markets arise as the result of the rate cut so far. And essentially, as what I said, the tweet that I sent out straight after rate cuts, giving everyone the timeline of when you should be expecting the market to move. First day it's moved, 2 to 3 days is when liquidity starts to move. And about 2 weeks to essentially 7 weeks essentially is when you see that market space moving on the uptrend. Markets analysis noted that while rate cuts typically spur risk-on sentiments and concerns over economic uncertainties persist, Jerome Powell declared that there was not currently a period heightened in terms of financial stability, risk, and emphasizing the need to adjust monetary policies as necessary. In Jerome Powell's words, the committee seeks to achieve a maximum employment and inflation at a rate of 2% over the longer run. Uncertainty about the economic outlooks remains elevated, and the essentially committee would be prepared to adjust the stance of monetary policies as appropriate if risk emerged that could impede the essentially committee's goals. The Fed keep essentially easing monetary policy, and crypto assets may see enhanced liquidity flows because of this. Within that time frame of 2 to 7 weeks, straight after rate cuts. The TVL on altcoin speculation as investors diversify into more volatile, potentially rewarding assets. In other words, liquidity is going to be flowing more towards riskier assets, which is cryptocurrencies, because a little bit of time has passed since the rate cuts. 2 to 7 weeks is when you see that movement happening in the market space. But according to Jerome Powell, he's still aiming for that 2% target. We might be expecting more rate cuts on the way. But so far, he's sticking by his words. He's mid-happy with his rate cut situation. Has that had any sort of impact on the crypto market space in terms of negative? Not really. In terms of positive, it's coming very soon. Now, Bitcoin. Bitcoin faces volatility aimed institutional demand surge. Bitcoin faces challenges maintaining above $112,000 in market volatility as industry leaders discuss its future, and this was reported essentially on CNBC Crypto World. So on the episode of CNBC Crypto World, they discussed essentially what's going to be happening for Bitcoin and going ahead. The volatility highlights institutional interest and supply constraints in cryptocurrency markets, promoting speculation on Bitcoin's future price trajectory. And just before I went live, essentially a news article came out, essentially a tweet of a news article came out suggesting that Trump has said that one day, essentially, Bitcoin will be essentially above all in terms of high price points. Bitcoin battles volatility at $112,000, driven by institutional ETF demand and regulatory clarity. Bitcoin faces challenges in maintaining the $112,000 levels, witnessing significant fluctuations attributed to various market factors, and recent evidence highlights the growing institutional demand and favorable long-term essentially outlooks spurred by on-chain data and market analysis. Now, Anthony and essentially Ben highlight on CNBC, they highlighted essentially increasing demand as significant market players. Key developments essentially show rise in ETF flows supported by corporate treasury actions and September's historical weakness due to tax selling ads to current market dynamics. The brief dips in Bitcoin's value reflects the volatile market conditions, with analysts pointing to tax-driven selling and structural demand. The reason essentially they're saying Bitcoin was so volatile essentially this month is because this due to taxes and the sell-offs that were happening, and that's why essentially Bitcoin became volatile. The rest of the crypto market space followed its footsteps. Experts' analysis underscores essentially the long-term bullish sentiments driven by essentially increased corporate and sovereign essentially treasury demands. Improved regulatory frameworks create a favorable essentially climate, paving the way for potential price increases over time despite current volatility. Past occurrences show Bitcoin's tendency to experience volatility in September due to profit-taking, followed by a recovery in later months. This pattern, essentially affected by supply constraints and increased institutional interest post-halving, is consistent with current developments. Ben, the CIO of Swan Bitcoin, essentially remarked, "What's driving Bitcoin's new all-time high is increased corporate and sovereign essentially treasury demand, reduction in regulatory uncertainty, and structural supply constraints post-halving." Expert opinions essentially emphasize that Bitcoin new all-time high price point potential is bolstered by reduced regulatory uncertainty and increased corporate interest, and these factors combined with historical trends provide insights into Bitcoin's possible future trajectory. So, on CNBC, discussing about Bitcoin's future, they mostly tied it to that what's actually driving Bitcoin higher now, it's not really the retail section anymore, so that's long gone. It's the ETF inflows, the institutions that are essentially pushing Bitcoin to new heights or trying to keep its price at least stable around somewhere around $112,000. According to CNBC, essentially the crypto world that was going on today, which makes sense, essentially, to be fairly honest. At that price point, retail section, especially the new side of crypto species, should be nowhere around Bitcoin at $112,000. There are much more better crypto projects out there you could be going for a much more cheaper price points. Now, moving on from essentially what CNBC suggested of who's actually in the Bitcoin essentially movement and who's actually helping to maintain its price, to the SEC. The SEC reportedly is ready to ease their rules for crypto startups. That is a brilliant idea. Honestly, day by day, we're getting announcements from the SEC that it actually does show that they have become a lot more, pro-crypto, much more friendly towards crypto innovation inside the United States and so on. And now they're going to be opening up their doors to crypto startups so they can have a much more easier setup than what they had previously, regarding Gary Gensler, who essentially kicked him out. He couldn't even stay outside the United States. Dubbed the innovation exemption, the proposal would essentially carve out limited flexibility for digital asset companies, allowing them to launch projects without being subject to full weight of securities laws right off the bat. The essentially SEC is reportedly aiming to introduce the framework before year end. If essentially adapted, the change could mark a shift in Washington's tone towards cryptocurrencies. Strict compliance requirements have long been a hurdle for startups, but not this time around. Often driven essentially early stage ventures overseas in search of friendlier regulatory environments, a lot of under Gary Gensler, a lot of startup companies, American blockchain startup companies, fled the country and went to Dubai. Now, those companies can come back, or even any other company trying to start up as a blockchain company, a Web3 company, and so on inside the United States can do it much more easier now. A lot more innovation, a lot more liquidity towards the US markets. A tailored exemption essentially would be intended to keep innovation inside the US borders while still maintaining investor protections. While details essentially remain scarce, industry watchers see the initiative as one of the clearest signs yet that the regulators are considering a much more supportive measures for the sector for cryptocurrencies, which has struggled to uncertainty and enforcement's heavy oversight in recent years. Now, we also had Gary Gensler a few days back come on CNBC and once again suggest his moronic opinion that he knew he was doing the right thing and that essentially keeping the crypto space on a tight leash was the right thing. According to Gary Gensler, still, he must be the most dumbest man on planet Earth because one, he knows he's going to be investigated by the SEC, essentially because they have no choice, because Coinbase is not letting go. And two, if Gary Gensler knew he was doing the right thing, I actually put a tweet out essentially under the news article as well. If Gary Gensler knew he was doing the right thing, then why did he delete his text messages, is what I said. If somebody's doing the right thing, they don't delete evidence. It's just as simple as that. But, Gary Gensler is an absolute moron. Now, moving on essentially from what the SEC is doing, because it's honestly, brilliant that the SEC is trying to make life easier for blockchain startup companies in the US. It brings more innovation into the US, it brings more liquidity into the US, venture capitalists can invest more, and so on. Morgan Stanley is who we're going to talk about next. Morgan Stanley partners with Zero Hash to offer crypto trading by 2026. Morgan Stanley E-Trade is preparing to launch cryptocurrency trading in 2026, partnering with digital asset infrastructure provider Zero Hash, in a move that underscores Wall Street's increasing, essentially embracing of digital assets. The rollout will give millions of retail investors direct access to leading cryptocurrencies. Morgan Stanley essentially spokesperson confirmed that E-Trade clients will be able to trade essentially, half of essentially the top 10, top 20 cryptocurrencies by essentially 2026. The announcement essentially follows earlier reports in May suggesting that the brokerage was experiencing partnerships to deliver on crypto essentially services. E-Trade, acquired by Morgan Stanley back in 2020 for $13 billion, has a history of serving retail traders with a user base of more than 5 million at the time of this essential acquisition happened. Its move essentially into digital assets marks one of the bank's most direct steps into retail crypto exposure. Zero Hash, essentially the chosen partner for the launch, recently raised $104 million at essentially $1 billion valuation in a funding round led by Interactive essentially brokers. Morgan Stanley has also participated in this rise. Zero Hash specializes in trading, stablecoin infrastructure, and tokenization services for financial institutions. As a part of the agreement, the company will build a full wallet solution for E-Trade clients. E-Trade's expansion pits it against Robinhood, which has aggressively essentially developed its crypto services in recent years. Robinhood now offers trading essentially across several digital assets and strengthened its position with $200 million essentially dollars in acquisitions of Bitstamp, one of the longest standing essential cryptocurrency exchanges. Honestly, it's brilliant to see Wall Street entering more inside the crypto space. And when heavy hitters like Morgan Stanley come out with certain news essentially points of, we're going to be offering crypto services essentially to the retail section, where you offer it to the institutional section and so on. When heavy hitters like that come out, it makes everybody else go, oh, maybe we should join inside the crypto space. And the more companies that join the crypto space, the more liquidity that's going to be entering towards the crypto space. E-Trade, essentially crypto debut, is a part of a wider push by Morgan Stanley into digital asset sectors. Since 2024, the bank has allowed its wealth advisors to pitch spot Bitcoin ETFs to eligible clients, broadening its exposure to essentially crypto assets for high net worth institutional investors. Earlier this year, also, CEO Ted highlighted at the World Economic Forum that Morgan Stanley was exploring opportunities in crypto essential transaction infrastructures. Interestingly, while several essentially major banks, including JP Morgan, Citigroup, Bank of America, and Wells Fargo, have been exploring essentially joint stablecoin projects, Morgan Stanley has not been directly involved. They've essentially decided to take their own route. But I do think there is some sort of partnerships or NDAs between these massive firms. Because let's be honest, essentially, BlackRock holds shares of Morgan Stanley holds shares essentially of Grayscale holds essentially shares of Morgan Stanley, Franklin Templeton owns BlackRock shares, and the list just goes on. They're all one big circle. Still, the institutions has signaled optimism around stablecoins. A 2024 essentially paper by Andrew Peel, Morgan Stanley's head of digital asset markets, argued that stablecoins could bolster the US digital dollar in terms of global standing. Facts. A lot of people think the dollar is going to go to zero, it's going to go away. That has never been the case. In terms of stable coins, they actually reinforce the dollar standing point. And the number one, essentially, fiat currency in the world is the US dollars. Everyone knows that. But the number one, essentially, digital, in terms of a stable coin in the world, in the digital aspect, is also the US dollars. And every time, essentially, USDT prints more, essentially, US Tether, in other words, essentially, every time Tether prints more USDT, it's actually backed by fiat and bonds and yields. Same scenario for USDC, same scenario for RLUSD, which in fact strengthens the US dollars. Now, E-Trade essentially services launches demonstrates how digital assets are increasingly being woken into the offerings of traditional financial institutions. By partnering with Zero Cash, Morgan Stanley essentially is building a bridge between established retail brokerage services and the evolving digital economy. If executed smoothly, the initiative could further essentially normalize crypto investing for millions of Americans, signaling a new chapter in the integration of Wall Street and blockchain technology. Now, before we talk about essentially the next news on tonight's live, which is regarding Australia, let's go inside the comment section. Let's see what's happening over there, and then we'll go straight into the next news. As I said previously, if you do have any questions, put it down. If you have any comments, put it down in the comment section. More than happy to help you out. Now, let's see where we're at. We were at here. Hi, Miles. George, good to see you. How you doing, brother? Putin has been really aggressive since his talks with China and North Korea. He has, I'll be honest, but I don't think he's that dumb, essentially, to be fairly honest. As much as Putin would like to flaunt his power, because he is a powerful man, and he is essentially, Russia is a powerful country, no doubt about it. But they're nowhere near in terms of power when it comes to the US. In terms of military budgets, I mean, what the US spends on their military is what some countries essentially have as GDPs, or multiple countries put together. But I don't think he'll be that dumb enough, honestly, to stop that, to continue this war even further and get NATO involved, because that pretty much be the end of Russia. Is this the switch they will flip XRP to rescue? Maybe. Regarding the war scenario, I mean, there's multiple scenarios on the table. We've always had the blackout scenario that still hasn't went away. There was a recent article that came out and suggested that the sun flares that essentially were happening a while ago are coming back, and that those sun flares could cause internet essentially break, the loss of an internet and so on, internet services in terms of satellite because of the sun flares. There's also suggestions of some other thing that's flying around essentially in the galaxy right now that may be hitting Earth. Essentially, that's also on the news as well. There's so many weird and essentially logical, you could say, scenarios that could possibly be happening. Consider all of them as outcomes, because one of them is definitely going to be playing out, because they always tell you what is going to happen next. And I know the reason why they always tell you why. And I know the reason why they always have to tell you before essentially it happens, because you have to accept that faith before essentially it happens. It's a weird concept. Now, evening all. Curtis, good to see you as well. How you doing? Could you hazard a guess what percentage of Swift XRP would have by 2028 to 2030? Hopefully all of it, to be fairly honest. I think once essentially, the financial sector sees, now obviously the financial sector has already seen Ripple in action in terms of finance, and they've also seen the XRP ledger in terms of action, in action in terms of finance. But what I mean is, I feel like once they see Ripple, essentially the XRP ledger in action for real, it would essentially take over Swift quite rapidly, because there's just no comparison. There's no comparison whatsoever between what Ripple's trying to bring to the table and what Swift has already brought to the table a long time ago. And as I said previously, it doesn't matter who Swift partners up with. They could partner up with anyone they wanted on this planet. Not many countries trust Swift, and it's not because of their high cost or low speeds. It's mostly to do with the political side of Swift, where they go around being forced to sanction countries. Swift is not a messaging standard company, even though it is on paper. it's more of a political company because it goes around and sanctions countries, but that's only because who tells them to sanction countries. Putting that to one side, Ripple essentially, once companies really see the XRP ledger in action, I think they would switch over quite rapidly. Especially, let's go back to what Ripple said on their own website. So Ripple has a blog section on their own website where they essentially tell you what's going to be happening in the future for the XRP ledger, what they've achieved so far, what their new partnerships are. And on one of their blogs, essentially, they said that the selling point of Ripple to the world of Swift is that large corporations tend to use Swift, and they've been using it for the longest time. Small and medium-sized businesses don't use Swift. Small businesses don't use Swift pretty much, at all, you could say. So it's a very minority, small percentage. Same goes for medium-sized businesses, and it's due to the high costs. So why am I bringing this up? Because of what Ripple said on their website, that essentially Ripple gives this advantage to small and medium-sized businesses to get involved in international payments and expand their business. And because of Swift, small and medium-sized businesses had to stay small because going international would have been too costly for them, because in terms of doing payments. So they stayed small, whereas the bigger corporations were able to get bigger and bigger and bigger because of Swift. The smaller and medium-sized corporations stayed where they are pretty much. Some medium corporations were able to get bigger, but the small ones pretty much had no hope. There was this monopoly system set up by Swift. Now, when Ripple comes into the picture, small and medium-sized businesses also get to go and go international. So what I am trying to say is, once they see the XRP ledger in action, the jump from traditional system to the XRP ledger will pretty much have to be like this, because if I own a business and the XRP ledger goes live in terms of financial payments and it's competing with Swift, I'm jumping on board. Why the hell would I be stuck on Swift for? So from a logical standpoint, when you see it in action, it just makes more sense for you to be on that wave than be stuck on the queue. In terms of also 24/7, in terms of essentially giving that essentially advantage, and it's not politically motivated. Ripple is not politically motivated in any sort of a way to go around and sanction countries, but Swift still is. So there's a lot of advantages essentially to go into that side and rather than staying on Swift side. So in terms of what percentage, essentially 2020 to 2030, it has to be quite a lot, because once they see it in action, I think that's it. It's like a domino effect. Good evening. And there has been study, and there has been essentially papers and contracts and essentially reports that have come out of all the testings, and even from essentially, I think it was Morgan Stanley that said that essentially Ripple is a lot more advanced, and the XRP ledger is an XRP, in other words, is a lot more advanced in terms of being used in in terms of the financial traditional world than Bitcoin and Ethereum is. Now, let's see where we were at. Good evening, Miles. How are you doing today? I'm doing great, Callie. Good to see you as well. How are you doing? How can people not see Bitcoin is weak? It's a good question, to be fairly honest, and a great comment. Money. The reason why people don't want to, and I'll use the word admit, because the majority of people who hold Bitcoin don't want to admit that it's CRAP. It's crap. The majority of people that hold Bitcoin don't want to admit to that because of money. There's so much money inflowing into it that they couldn't care less, even knowing that it can't outperform, the XRP ledger, for example, in terms of finance, in terms of tokenization, in terms of any other essentially aspects. It just can't outperform it. And as I said, the Morgan Stanley papers saying that Bitcoin and Ethereum essentially are quite weak compared to what Ripple's offering. And Ripple's offering something that the traditional financial system could actually use, because it's what they use, but in a digital sense. So they see it. Believe me, I feel like they know, because you have to be an absolute total moron to not see it. They know that Bitcoin essentially is weak, but they don't want to admit to it because of all the money inflowing into it. They're loving it. They're loving Michael Saylor hyping up Bitcoin, keep on buying it, because their wallets are getting bigger and bigger. They love it when Michael Saylor comes out and goes to the retail section, everybody should hold Bitcoin. Coming from a guy who spends $900 million on Bitcoin, telling the retail section to put their $20 into essentially Bitcoin. It's just, absurd to be even saying that from Michael Saylor's perspective. But, he's only saying that because, well, if Michael Saylor's past, in other words. But they know it's weak. And the reason why they don't care is because of all the money flowing into it. But at one point, it's like a sink, for example, you could say, as an outcome, not the outcome, but as an outcome. Imagine like a sink full of water. And then you just pull essentially what's blocking the water from going down into the pipes. You just put it out and the water starts rushing in. That could be an outcome for Bitcoin's future. Nobody knows where the future is headed. Now, hi Miles and family. Alex, good to see you as well. How you doing? What up, Miles and CMF? Ray, good to see you as well. How you doing? Hi Miles and CMF. Stormy, good to see you as well. How you doing? Hello, Miles and CMF. Comatose, good to see you as well. How you doing? Hi Miles, what's the latest and what's everything in the markets? A lot of things have been happening inside the market space. Johnny, good to see you. It's all talk. Just keep your eye on the price. XRP facts. Miles, is okay to sell a small amount of coin. I need to using some money. I have time to buy back more. Johnny, it's up to you. It's not financial advice. It's up to you. If you need money, then obviously, you know what to do. It's your money at the end of the day, Johnny. You can do whatever you want in the market space. Not financial advice at all. There's definitely something brewing for sure. Facts. Scott, let's go. Hi, Miles and CMFs. I'm sorry I'm late. I was cooking dinner. No problem, Peg. What's for dinner? Please like and respect. Please like and repost CMF watching on X to support Miles. Yes, thank you so much to everybody from the CMF who has already liked and retweeted and put a comment outside the live. If you haven't done that, CMF members, take 5 or 2 seconds, or even 1 second to like and retweet live and put a comment outside the live. Miles, I have missed it, but did you talk about the connection, aka deal between BlackRock and XRP? Not yet, towards the end. Guys, for me, myself, and I, XRP, XLM, XDC, HBOR, ACH, SEI, shared live. Let's go, Scott. Thanks. Now, Australia. Australia firm Fetal secures $100 million to build a Solana-focused digital asset treasury. Australian companies decided to go full Solana mode. The same as yesterday's news that I shared. One company changed their company name on the public markets to an AVAX name, and then essentially decided to create an AVAX portfolio. This particular company, and essentially a public company, also decided to create a Solana treasury. So essentially, Fetal Corporations announced today that it has locked in $100 million of financing facility to begin building a Solana-based digital asset treasury, DAT in other words. Essentially, as a part of its shift, the company revealed plans to rebrand itself as Solana Australia Corporations, marking its transition into a blockchain space. You see what's happening sometimes, not in this particular case at all, but there has been some certain companies that weren't doing too well on the stock market that decided to become crypto companies to boost their stock prices. And it goes back to what essentially Meta did, a Japanese company essentially. The company claims it is the first Solana-centered digital treasury in Australia, aiming to establish itself as a pioneer in this emerging field. According to the statement, the new treasury will go beyond simple staking. Fetal essentially intends to deploy its sole holdings across structured products such as essentially options, snowballs, and on-chain liquidity strategies, while applying mechanisms to limit downside risk. David, essentially an advisor, recently brought essentially to guide the initiative, emphasized the broader implications. Digital asset treasuries are paving the way for the future ETFs. The ability to generate yield outside of staking will separate the leaders from the rest, and we want to be at the forefront of this movement. To fund these Solana purchases, Fetal has entered into convertible notes, listing worth of up to $100 million with US-based institutional investors. From the initial round of $10 million will be deployed immediately to acquire SOL tokens. This strategy mirrors a growing trend in 2025 alone, with over 20 million, essentially over $20 billion has been allocated into digital asset treasuries, with the majority targeting essentially Bitcoin, Ethereum, Solana, and XRP. Major players essentially in Solana's DAT sectors include RPX, Sharp Technology, and DeFi developers. Meanwhile, Forward Technology, supported by Galaxy Digital, Jump Crypto, and Multicoin Capital, is also aiming to raise $4 billion to expand its essentially their own treasury of Solana as well. Now, if you are somebody that holds Solana, that's good news for you. And also, it's good news in general for the crypto space as well, because it adds credibility towards the crypto space and adds indirect value towards the crypto space as well in general. Now, over time, not overnight. Kazakhstan is what we talk about next. It's a country that we've only talked about on this slide pretty much maybe twice in general. But the reason why we're talking about Kazakhstan right now is because Kazakhstan, which is also where Borat is from. I'm joking, Borat is not from Kazakhstan, but it was a good film. Now, Kazakhstan unveils EVO stablecoin backed by Solana, MasterCard, and Eurasian Bank. The National Bank of Kazakhstan revealed the pilot of the first ever national stablecoin, EVO. The essentially asset is pegged to a local currency, the Kazakhstani tenge, and operates on a Solana essentially based blockchain. The project is being launched under the country's regulatory sandbox framework to test new financial technologies. The token's essentially issuance is led by local crypto exchange, essentially Interbix, with Eurovision Bank and MasterCard serving as the street partners in the rollout. Now, just to be fairly honest with everyone, this isn't some sort of a full-on rollout at all, even though they're suggesting it's a rollout. They're actually just testing it in a digital sandbox with Solana to see how things would go. The token's essentially issuance, Governor Tim highlighted that the EVO stablecoin reflects Kazakhstan's push for a digital transformation and creating their own digital tenge. Not a CBDC, but just a stablecoin. We are embracing global trends in blockchain and digital finance by introducing a tenge-backed stablecoin. We aim to broaden essentially financial access, accelerate payments, and enhance transaction security, explained. Eurovision's Bank will be among the first institutions to process payments using EVO, according to essentially Lizard Steven, the chair of the bank's management board. This initiative also marks a milestone for Kazakhstan's financial ecosystem. The EVO stablecoin represents a new era for Kazakhstan's economy. We believe it will become a standard for payments across industries, ensuring faster, safer, and more efficient transactions because it is fully backed by tenge and supported by essentially regulators. It also builds trust within the financial system, as stated, and the launch of EVO places Kazakhstan among the growing list of nations experimenting with stablecoins to modernize payments and strengthen financial infrastructure. With Solana's blockchain efficiency, MasterCard's global payments and expertise, and the support of a major domestic bank, the project could set precedent for future state-backed digital assets in Central Asia. So, Solana, Eurasian Bank, Kazakhstan, in essentially a digital sandbox, are right now testing the idea, the possibility of a Solana stablecoin for Kazakhstan. Again, good news for essentially Solana, and also adds credibility in general towards the crypto space of that digital era. So indirect value in terms, not overnight but long-term wise. Now, moving on from that to the crypto markets, in other words, the Clarity Act. Before we talk about that, let's go to the comment section first. As I said previously, this is live as always, which means if you do have any questions or statements, put it down in the comment section. I'm more than happy to help you out. So let's see where we're at. I could see Mike has put a donation in. Mike, thank you so much for the donation of essentially 25 Canadian dollars. Absolutely amazing. Mike, honestly, thank you so much, brother. Straight to from incredible. Thank you so much. I am not taking my eyes off. Okay, now we were here, I think. We were much more further up, maybe. We were here. Yeah, share the live. Let's go, Scott. Can there be a scenario where the XRP price will not go up after an XRP ETFs are approved? Yes. Okay, let me explain to you something. Regarding the XRP ETFs, if you go back essentially regarding Bitcoin ETFs, when Bitcoin ETFs were approved, did Bitcoin shoot up straight away within seconds? Not really. It essentially went down, and people said, I told you it was not big news at that time. In January, when Bitcoin ETFs got the green light, people came out and said that, oh, who cares, essentially, Bitcoin ETFs, nothing's going to happen, and so on. And some people said everything is going to be happening. When Bitcoin ETFs essentially passed and then approved, it didn't go shooting up to the moon or to Mars in any sort of a way. What actually happened was a gap happened in between where not much was happening, and then suddenly the inflow started picking up. Same scenario happened with Ethereum. When Ethereum's ETF was approved, nothing happened. There was a gap in between where nothing actually happened. And then the inflow started happening. The reason why there's a gap right there is because that gap creates uncertainty. And with uncertainty, people tend to sell, which opens essentially better positions for the institutions that are going to buy the ETFs. You've got to understand one simple factor. If there are essentially 10 corporations or 11 corporations that have applied for XRP ETFs, the reason why they've applied for XRP ETFs is because their client base wants ETF, essentially XRP ETFs. That's the only reason why we have so many essentially XRP ETF filings compared to the rest of the altcoin ETF filings, because their client base wants an XRP ETF. So you know for a fact that they want to buy XRP ETFs. When an XRP ETF goes live, you know for a fact that they want XRP ETFs. Otherwise, they want to go through the process of filing and all the time and resources and money they spend on that, especially with all the filings. So you know for a fact that their client base wants to buy XRP ETFs. But when the moment it goes live, nothing happens. There's a gap. Same scenario for Bitcoin, same scenario for Ethereum. There was a gap in between where nothing happened. But you know they wanted to buy it. Otherwise, why even file it? Because their client base says we want to buy it. There's a tremendous, too much in terms of their client base that wants to buy that particular asset. Then the firm takes essentially that as an idea and goes, okay, maybe we should move forward with it because our client base or our heavy hitters wants to buy that asset. So we know for a fact they want to buy it, but they don't buy it right off the bat. Now, why don't they buy it right off the bat? Because they'll be buying it as you will be buying it, which will push their price higher and higher to get in at a better price point. But when they create a gap of uncertainty, some people go, nothing happened. I might as well jump out now. There's no point. Or essentially, some people will put long positions down because the XRP ETF is passed. Same scenario happened with the Bitcoin ETF, same scenario happened with the Ethereum ETFs. People put long positions down because we know their client base wants it. So they're going to buy it. We're going to put long positions down. But they don't buy it, then we get liquidated. It's all because they want to leave that gap of uncertainty where you think maybe nothing's going to happen. But if you really think about it, something is going to happen because that's why they filed it. But they leave you with a gap of uncertainty. And then at one point, you'll see the inflows happening. And then at one point, the inflows won't stop. Like what happened with Bitcoin. Just broke a record. Same thing's going to be happening. Same thing that happened with Bitcoin, same thing that happened with Ethereum, same thing's going to be happening with XRP ETFs. That's gap of uncertainty, and then that gap gets filled up and it goes high. But they have to leave that in between. Because if they don't, then everybody will put long positions, because then we know what the next movements of the markets are. If essentially an ETF comes out, we know it's going to go up because we know their client base wants to buy it. Otherwise, they wouldn't file it in. And we will all put long positions and everybody will become rich. That's not how the game is supposed to work. Otherwise, everybody will be making money. The only people that make money inside the market space are essentially people who don't get essentially frustrated and people who don't fall for their games. If you get frustrated, then they've won. The corporations have won. If you essentially fall for their game, then they've won also. They play a lot of games. They play a lot of mind tricks on essentially the retail section. There's a reason why they have extremely deep pockets and the retail section doesn't. Because they've been playing this game for a long time and they know what works on the general public and what doesn't in terms of the tricks they play. So that gap of uncertainty, a lot of people will fall for it and go, that's it, I'm done, I'm out, I'm tired, I'm frustrated, I don't want to do this anymore. ETF passed, nobody's buying it. But the same scenario happened with Bitcoin. Same scenario happened with Ethereum. What happened after that? The prices went up. You know they're going to buy it, full stop. And that's all that matters. You know they're going to buy it. There's a reason why it has the majority of ETF filings, because their clients want it. So if you know their clients want it, you know they're going to buy. But they'll leave you with that gap of uncertainty of you going, why is nobody buying? And that's what they want you to think. But that's not the real case of it. Because the only reason they file it is because their client case wants to buy it. Now, can there be a scenario? So no, there is no scenario of nobody essentially. The scenario of that, yes, in a way, yes. I agree. I am not taking my eyes off XRP, XDC, or XLM. Things are about to happen. I'm following this institution. So let's go, Scott. I said to you 2 years ago, I said to everyone inside of CMF 2 years ago, we used to do these lives on TikTok only 3 years ago. I said the last step is always frustration. Essentially don't let frustration get to you. If you let frustration get to you, then you're going to be out of the game. I would share the pic. I ate it all long, lentils and essentially Spanish rice. No problem, Peg. Mike, honestly, once again, brother, thank you so much for the donation. Don't let institutions trick you into selling your XRP. When you make it, you want to be right there with them. There is truly enough money for everyone. Believe it. Facts. Buy the dip and hold the line. Facts. Let's go, Mike. Let's go, Scott. Let's go, Peg, and so on. Now, Patrick is who we're going to talk about next. You might be thinking to yourself, who the hell is Patrick? Well, Patrick is a top White House official and has came up with a perspective. And here's his perspective. So Patrick Witt, a top White House official, has shared an optimistic outlook for the crypto regulations inside the United States. According to Witt, the long debated crypto market structure bill is likely to pass in 2025. His statement suggests that Biden administration is becoming more open to working with Congress on establishing a clear essential legal framework for digital assets. This development could be a major step forward for the United States in terms of crypto industries, which has long operated in a gray area due to regulatory uncertainty. Witt's comments marks one day of the essentially strongest signs yet of federal support for crypto legislations. If passed, the crypto market structure bill will set new standards for how cryptocurrencies are classified and regulated. One of its main goals is to define which assets fall under the jurisdictions of the Securities and Exchange Commissions, the SEC, and the CFTC. The bill is also expected to establish rules for crypto exchanges, custody providers, and decentralized finance DeFi protocols. By doing so, it could reduce legal confusion, boost consumer projections, and encourage responsible innovation in the sector. Industry leaders have long demanded a stable regulatory environment to keep the United States competitive in the global crypto markets. With support growing in Washington, this bill could deliver just that. While legislation takes essential time, Witt's statements reflects the growing alignments between the executive branch and lawmakers. If the crypto market structure bill is passed in 2025, it could become a landmark moment for digital asset space. Crypto investors, essentially developers and companies, should prepare for more structured futures, one that balances innovation with oversight. Now, what Witt essentially is coming out as a top White House official and saying is that the Clarity Act this year passed through, full stop. And the Clarity Act will remove all types of gray areas, which is the biggest market structure bill for the United States, to be fairly honest. The Genius Act, brilliant. Passing through stablecoins, good. Market structure bill is related to pretty much everything inside the crypto space. And that is essentially what I've said on day one. We need to get past ASAP. Now, moving on from that but good news coming from a top White House official saying that, this is going to be a done deal this year. To Argentina. Argentina has been, the hotspot for the Bitcoin future in terms of essentially the decentralized land. And they've even suggested that Satoshi Nakamoto lives in Argentina. And that was suggested by Argentina's advisor. Now, Argentina's government expanded its regulatory framework today, impacting Bitcoin and crypto for mandating essential registration, compliance, and reporting to operate legally. Similar to what Dubai announced yesterday. The United Arab Emirates yesterday announced that they're joining the CARF group of countries, which essentially is countries sharing data of the crypto retail section, essentially from country to country, in terms of, is anybody essentially dodging taxes? Is anybody using their cryptocurrencies for illicit activities? Exchanges, hot wallets, everything. All that data collected will be shared between these jurisdictions around the world, even if you live in the United Arab Emirates, which has always been the hotspot. Dubai has always been a hotspot for crypto criminals. That is also going to be coming to an end, that chapter as well, with the new, essentially, the United Arab Emirates joining essentially CARF. Now, Argentina is about to be offering a similar thing where they're going to be cracking down on illicit activity in cryptocurrencies, tax dodging, and so on. The regulations essentially integrate Bitcoin into the formal economy, impacting market operations and placing emphasis on oversight and also, most importantly, transparency. Argentina's crypto regulations have expanded in 2025, impacting Bitcoin trading under the National Securities Commission's oversight. New rules require strict compliance from virtual asset service providers, similar to what CORF is doing with essentially all these blockchain companies. The Central Bank of Argentina continues to prohibit banks from offering crypto services. Financial compliance now falls under the UIF for money laundering preventions. Bitcoin and other cryptocurrencies in Argentina, in terms of crypto space, will now feature essentially strict reporting obligations affecting essentially businesses and investors alike. The regulatory essentially environments and essentially may encourage a more institutional essentially adoption of cryptocurrencies, balancing compliance with growth and potential. And historical data trends shows that Argentina's shifting stance from endorsements in 2023 to stricter regulations much more later on. It seems that more countries are jumping on this bandwagon of, when it comes to illicit activities in cryptocurrencies and tax dodging. That is becoming two of the most important factors going ahead, and it is going to become two of the most important factors, because taxes is how governments, take your money and spend it. I would like to say governments will take your money and fix the roads. Not really. Or they take your money and help with housing. Not really. They would take your tax money and use it for better imports and exports in terms of food. Not really. Nobody really knows what governments do with your tax-paying money, to be fairly honest. On paper, obviously, they would suggest 10% of your money will go to, fixing roads, 20% will go to this, 5% will go to this, 2% will go to this. In reality, much more different than what it says on a piece of paper. It goes into their pockets. But anyways, tax is a very big issue for cryptocurrencies. And essentially, it seems that a lot more countries are maybe jumping on the bandwagon of sharing data, you could say, possibly. Not this year, by 2028. Now, Vietnam is what we're talking about next. So before we talk about that, let's go to the comment section first. As I said previously, this is live, which means if you have any questions, comments, put it down in the comment section. More than happy to help you out. And I can see that Ian has put also a £20 donation. Ian, thank you so much, brother, for a £20 donation. Absolutely incredible. Thank you so much. The best online crypto program on any platform, the Crypto Mouse family. Let's go. Facts. We are the best, to be fair. So the CMF is the best. Share the live. Let's go, Scott. Buy the dip and hold. Not being cocky in any sort of way, but we are the best. Buy the dip and hold the line. Nice one, Miles. Let's go, CMF. Let's go, Ian. Soon they will have to when everything goes on the blockchain. Yeah, pretty much they have to, honestly. Now, Vietnam is about to be launching something quite interesting. Vietnam has suggested in the past that they are, going to be creating some sort of a crypto exchange, but a government crypto exchange. It's an interesting concept. Are people going to trust it? Not really, to be fairly honest, because people would trust essentially, private companies or public companies much more than their own governments, to be fairly honest. And that does, tend to be the government's fault. If people don't trust the government, then that's, the issue doesn't, arise from the public. It's pretty much because they've done something wrong in terms of the government. Now, Vietnam will initiate a 5-year regulated crypto market pilot starting January 1st, 2026. Is this a concept that other governments might pick up? The British government might create their own crypto exchange. The US government might create their own crypto exchange, and so on. This pilot could dramatically reshape Vietnam's landscape essentially by pushing market flows towards regulated platforms, forcing compliance shifts, and potentially shifting new regional regulatory benchmarks. Vietnam's new 5-year pilot program marks a significant step in regulating its digital asset sector. Set to begin on January 1st, 2026, it aims to establish an officially regulated market space. And this isn't just for the Vietnam, essentially, crypto exchange, government crypto exchange. It's also for, private and public companies to come on board as well. The Ministry of Finance leads the initiative, focusing on strict control and consumer protections. The program involves state-linked banks and major corporations, positioning them essentially as a national champions with institutional oversight. The pilot restricts market participation to highly capitalized entities within a minimum of $379 million in terms of capital. This move intends to shape essentially the market space, limiting the role of startups and foreign entities, Experts foresee the liquidity shifts to domestically regulated platforms, supported by Vietnam's estimated $100 billion crypto market space. So if you thought to yourself, Vietnam doesn't really bring any sort of liquidity towards the crypto table, $100 billion so far is what they're bringing towards the table in terms of crypto money. That's a lot of money. Now, mandatory essentially asset migration from offshore platforms may trigger legal consensus for non-compliance. The regulated market, with the cautious yet progressive essentially approach, prioritizing essentially strict controls and participant protections under the Ministry of Finance. Previous essentially attempts to regulate cryptocurrencies in Vietnam were ineffective due to widespread adoption. Japan and South Korea's regulatory essentially pilots provide a model for increasing compliance and formalized market essentially adoptions. Experts predict shifts similar to those in essentially Japan, expecting more regulated exchanges and elevated major asset tradings. The program may lead to increased on-chain essentially KYC staking activity and shift towards local exchanges. Japan and South Korea are pretty much on the same page in terms of the regulations they're putting out. Vietnam, interesting concept. They're about to be opening a 5-year essentially pilot program for crypto companies to come and join essentially Vietnam, or startup companies and so on. But they're also still on that whole government crypto exchange, which, you know, I've said since day one, it's a very interesting concept. That would anybody use a government-owned crypto exchange instead of buying from Binance, Coinbase, Crypto.com, Kraken? Would you go to a government-based exchange? I would say the majority wouldn't inside the crypto space. The minority might, and the institutions and banks will probably do that rather than buying from those third parties. Now, if you think to yourself that you might be essentially, you know, late towards the crypto space, because you might be thinking to yourself, especially people who've just recently joined the crypto space. Now, I always try to talk, essentially, whoever I meet in life, I always try to say, you know, talk about cryptocurrencies and so on, just to see what the flow is, if they like cryptocurrencies, if they're involved in cryptocurrencies and so on. And, you know, the new people that I talk to, they think sometimes it might be too late to join the crypto space. And it isn't. You're still quite early-ish towards the crypto space, to be fairly honest. So a new report has came out just for, in terms of the United States, 14% of Americans own cryptocurrencies. Only 14%. Long time ago, that was 1%, but only 14%. So a recent essentially Gallup poll shows essentially only 14% of American adults own cryptocurrencies, reflecting essentially ongoing skepticism despite regulatory efforts to increase digital asset adoptions across the United States. To be fair, they just started essentially increasing adoption because of Trump's essentially presidency. Under Biden's presidency, you could tell why no one wanted to join cryptocurrencies. This indicates that persistent caution among investors impacting potential market growth and underscoring the challenges of digital currencies facing achieving broader acceptance. Gallup Inc. essentially reports that 14% of American adults now hold cryptocurrencies, conducted between June 1st and June 15th, 2025, and the poll notes a modest increase in ownership. Investors with over $10,000 essentially in traditional assets have seen an essentially adoption rise to 17%. Surveys shows that crypto ownership rising, but viewed it essentially still risky by majority of investors. The findings concede with increased regulatory scrutiny inside the US and the following initiatives, essentially like the Genius Act, which helped the crypto space. Gallup's data essentially shows that while crypto appeals grows, most investors still deem digital assets very risky. I would say it is very risky. I would agree with this, essentially reinforcing prevailing risk, essentially according to what was said in the reports. Now, despite some progress in institutional adoption, retail interest remains limited. Now, Fidelity's 401k crypto offerings face essentially some sort of movements happening there. Social acceptance for cryptocurrencies and behaviors are key factors, with 55% of respondents wary of crypto risk, a small fraction of only 4% considering purchasing cryptocurrencies soon, excluding the people who already hold cryptocurrencies. The point of all this, essentially, you know, this data coming out from Gallup, essentially 14% of Americans only in cryptocurrencies and so on, is that you're not too late. If you are somebody inside the crypto space that has a small crypto portfolio, let's say, and you're thinking about expanding it, you don't need to go big. You can, you know, essentially go in small amounts on a weekly basis or monthly basis, and you're not too late to the game. If you're somebody that's very, very new towards the crypto space and you have maybe 1 or 2 tokens, or you don't have any tokens, and you're thinking, what's the point? The prices are too high already. They really aren't. Depends what you're going for. If you're going for Bitcoin, yes, it's way too damn high for anybody inside the retail section to be purchasing it. But there are other crypto projects out there that bring so much more potential, even in my eyes or on paper, than Bitcoin. XRP, XLM, XDC, HBAR, essentially, these projects are still incredibly cheap for what they are, in my point of view. XRP, XLM, XDC, HBAR, Cardano, incredibly cheap for what they are, of what they're going to be bringing to the game later on. Now, moving on from that to Ripple. Before we talk about Ripple, let's go inside the comment section first. Let's see where we're at inside the comment section. The best crypto mouse, the best online crypto program on any platform. Look at Mouse Family. Facts, share live. Let's go. Buy the dip and hold the line. Nice one, Miles. Let's go, CMF. Let's go, Ian. Soon they will have everything goes on the blockchain. Facts, it will. Dong, they shut 83 million bank accounts, I think because people did not register biometrics for their bank accounts. Yes, I heard about that news as well. Essentially, was it Vietnam or was it Indonesia or something, regarding people didn't register for digital IDs, so they had to close or freeze their accounts because they didn't essentially apply for digital IDs. Nobody gets to reject digital IDs. I said a long time ago. A lot of people think they can reject digital IDs. I've seen people protesting in the UK for it. There are people who are protesting right now, not this time, but in other words, we're protesting against digital IDs. I've said this a million times and I'll say it again. You can't prevent from what's about to come. You can't stop it. The idea of stopping CBDCs or stopping digital IDs or social credit systems or 50-minute cities, it's not possible. I would love for that to be possible, a reality. But unfortunately, it isn't. Because the people that are running the show made those essentially, setups or layups, you could say, a long time ago. And the reason why you can't stop it from happening is because we don't have unity. We just don't have unity. And because we don't have unity, they can pretty much get away with anything. Governments can pretty much get away with anything they want because we don't have unity at all. And because we don't have that, because we're so scrambled up into our own groups and race and religion, it's easier for them to control us. So therefore, as much as you try to scream and shout and hold a placard against digital IDs or CBDCs or 50-minute social, 50-minute towns and so on, it's a losing battle because we don't have unity and they can easily trick you. The world is the way it is because people, are very forgetful. And that's the reason why history, as I say, will always repeat itself. Now, Ripple. Let's go, Ray. Sure, it was Vietnam, Miles. I think it was Vietnam as well, yeah. Now, Ripple. Ripple partners with securities for RLUSD integration. This is quite of a major news, to be fairly honest. Major news. Because Ripple's RLUSD, essentially stablecoin, now serves as the liquidity bridge for essentially Van X, for BlackRock's Build Fund and Van X V-Build tokenized treasury products. Massive news. Ripple, RLUSD, BlackRock, Van X, big news. This partnership utilizes securities platforms, enabling direct access swaps, enhancing liquidity and compliant DeFi integration. Remember where RLUSD started and where it's at now. It's a lot more accepted than any other stablecoin out there, excluding essentially USDT and USDC. But USDT isn't accepted either, to be fairly honest, and USDC is. Ripple and securities have partnered to integrate RLUSD stablecoin for listing tokenized fund swaps for BlackRock and Van Eck. The collaboration creates a vital liquidity bridge between traditional finance and on-chain DeFi, boosting stablecoin utility. Ripple has joined forces with securities to integrate RLUSD stablecoin, enabling investors in BlackRock's Build and Van Eck's V-Build products to swap holdings directly. The move essentially enhances liquidity between traditional financial assets and crypto ecosystems, and Ripple's leadership, including Brad Guggenhaus and Jack McDonald, emphasized RLUSD's institutional focus and regulatory clarity. These efforts aim to bridge traditional finance and crypto through the stablecoin's new utility and integrated infrastructure. This partnership essentially delivers real-time settlements and programmable liquidity for new generations of compliant on-chain investments, said Carlos the CEO of securities. Now, Monaco, essentially the CEO of Ripple, also talked about this partnership. Brad also talked about this partnership as well between BlackRock and essentially Franklin Templeton and securities and Ripple. It's massive news. The partnership essentially impacts DeFi protocols by introducing continuous liquidity and utility for RRUSD, likely affecting essentially the total volume locked to TVL metrics across DeFi landscapes. Additionally, this encourages future stablecoin integrations in financial products, fostering deeper TradFi and blockchain collaborations. Potential regulatory outcomes will include enhanced stablecoin oversight and transparency, as RRUSD operates under financial services charter with reserve verifications. Past tokenization events, similar by those by Franklin Templeton, have shown favorable increases in liquidity and governance and complexities, signaling a promising horizon for RRUSD in terms of increased adoption. So, RRUSD was obviously chosen because it is a great stablecoin. Not only that, has full transparency, no issues like essentially Tether does with USDT, which is why they had to create the USAD, essentially, to get a fresh start. But this is an incredible announcement, incredible partnership, and also saying that, the other essential stable coins that were listed, USDC, for example, they're tremendously well in terms of liquidity because of that partnership, which was announced a long time ago for USDC. Now with RRUSD, starting from nothing in terms of a stable coin to now where it's sitting in right now, being used or being announced in terms of partnerships and corporations with these heavy hitters. And let's not forget the other interview that was done with essentially BlackRock CEO Larry Fink, where essentially he was asked the question, if I'm not mistaken, it was either on CNBC Crypto World or was essentially on Bloomberg. He was asked the question of, there's a Bitcoin ETF, there's a Ethereum ETF, what about an XRP ETF? And Larry Fink said he can't talk about it. Now, that raises questions. Why, as a CEO essentially like Larry Fink can't talk about it? Why can't BlackRock talk about XRP ETFs? Is it because of an NDA? Possibility, yes. Now, why would there be an NDA for essentially an XRP ETF? Doesn't need an NDA. You don't really have NDAs for just ETFs for Bitcoin, Ethereum, XRP, Solana, whatever ETF it may be. You don't really have NDAs in place. That would suggest that there is much more going on between BlackRock and Ripple, and why he can't talk about it at all regarding essentially. Because if there was no XRP ETF by BlackRock, and he was asked the question, so Mr. Larry Fink, there's a Bitcoin ETF, there's an Ethereum ETF, is there going to be an XRP ETF by BlackRock? He could have just said no and moved on. But the reason why he said the words, I can't talk about it, it means there's an NDA involved. And that means there is more to it than just a simple XRP ETF from BlackRock. That means there is something going on between Ripple and essentially BlackRock that step by step we're going to see it happening. This could also be one of the steps, essentially RRUSD's integration into BlackRock's essentially funding, into BlackRock's essentially build fund. This could be one of the steps. But it does suggest that there is a lot more going on between BlackRock and Ripple when the CEO of BlackRock goes, I can't talk about XRP. Because he could have just said no, if there was nothing to it. But it's I can't talk about it. Or he could have said yes, there's an XRP ETF in the works. But by him saying I can't talk about it, it suggests an NDA. NDAs aren't made for ETFs only. There's more to the storyline. And also, let's not forget the Ripple Swell event. BlackRock's members were there as well. Now, it is quite big news. That's what I'm saying. That's what I'm trying to, essentially share with you, that this is more than just a simple, RRUSD being used in this V-build, essentially in this build. Now, Ripple's RRUSD stablecoin now serves as liquidity bridge for BlackRock's build fund, with essentially VanEck on board. And this is, massive. The cryptocurrency landscape is ever evolving, and Ripple remains at the forefront by securing that vital alliance that highlights its enduring potential. Today, Ripple announced that crucial partnership aimed at fortifying its standing with the US blockchain financial sector, And Ripple's recent collaboration with securities is the noteworthy of this metric right now, as it addresses asset tokenization needs for influential entities like BlackRock. This partnership introduces transactions for BlackRock in terms of their build and their V-bill, essentially in terms of VanEck's V-bill. The availability of RLUSD for these tokenized funds allows around-the-clock trading, and Jack McDonald from Ripple, essentially Senior Vice President of Stablecoins, highlighted the importance of this new development. This is what Ripple said, essentially. Introducing RLUSD as an exchange option for tokenized funds represents a natural progression while bridging essentially traditional finance and crypto. RLUSD essentially caters to institutional needs by offering regulatory clarity, stability, and tangible benefits. As adoption essentially rises, partnerships with trusted platforms like securities are crucial for unlocking new liquidity and driving institutional level use cases. Said essentially by Carlos, the CEO of securities, and essentially said by Jack McDonald from essentially Ripple. Partnering with Ripple to integrate RLUSD into our tokenization infrastructure is a significant step forward in automating liquidity for tokenized assets. Together, we facilitate real-time settlements and programmable liquidity in on-chain investments and product classes, bringing the full potential of blockchain to institutional finance. So, with essentially BlackRock CEO saying the words, "I can't talk about it," there's only one possibility, NDA, which means there is more to this whole BlackRock and Ripple story, more than just a simple ETF, which means step by step, we're going to get those announcements coming out from BlackRock and Ripple. On that note, we have come to the endings of tonight's live. This was episode 378 of the CMF Live, which means if you... Sorry. Sorry about that. This was episode 378 of the CMF Live. The CMF stands for Crypto Mouse Family. If you liked and retweeted this live, thank you so much to everybody who has liked and retweeted this live on essentially X and put a comment outside the live. And if you're watching this on YouTube and you also like the live and put a comment outside the live as well, thank you so much to all of you. CMF members, if you haven't liked or retweeted this live, please like and please retweet and put a comment outside the live. If you want to show appreciation for what I do, honestly, just put a like and put a retweet outside the live. And also, eventually, if you're watching this on YouTube as well, just put a like. And if you subscribed and followed me during this live, thank you so much and welcome to the CMF family. And I also want to say thank you so much to Mike and Ian for both of their donations. Absolutely incredible. Thank you so much, Mike and Ian. Now, before we do go, let's go to the comment section first. The governments have made it in that way by dividing all of us. Yep. They have, and they succeeded very well. Miles, you never cease to amaze me. Thank you so much for the information. Fantastic information. No problem, Addy. Anytime. Thank you so much for the kind words. Good night, Miles and CMF. Thanks for the news. See you tomorrow. Let's go free and forever. See you tomorrow sometimes usual as well. Good stuff. Big stuff. Appreciated. No problem. Anytime skits for crypto. Welcome to CMF Live. Good night, Miles and CMF. Mike, let's go. See you tomorrow about the same time as usual. Thanks for your great info, Miles. Have a good night. Let's go comment to see you tomorrow, same time as usual as well. Good night, Miles. And also, CMF, thank you for a great live and news. Let's go, JP. See you tomorrow, same time as usual as well. Oh, yeah. Let's go, Curtis. See you tomorrow, but at the same time as usual. Good night, Miles and family. Great live. Many thanks for all you do. See you tomorrow. Ian, let's go. See you tomorrow, same time as usual. Good night, brother Miles. And good night, CMF. Let's go, Funky Brother. See you tomorrow, same time as usual. Mike, let's go. See you tomorrow, same time as usual as well. This was episode 378 of the CMF Live. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Tune in tomorrow for episode 379 of the CMF at 10 p.m. London time onwards, as always. Miles, we will see you tomorrow night at 10 p.m. Let's go, Funky Brother. I'll see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. CMF, see you all tomorrow, same time as usual. Love you all. Thanks for another great show. Much to love. Also, thanks also for the donation, CMF. Take care. Let's go, Ray. See you tomorrow, same time as usual as well. Good night, Miles. Khalid, see you tomorrow, same time as usual. Thanks, Miles. And good night, all. Stormy. Let's go. See you tomorrow, same time as usual as well. See everybody tomorrow, same time as usual. Like, retweet, follow, subscribe if you already haven't. If you have, honestly, thank you so much. See you tomorrow.